Good morning. The U.S. stock market is closed today, Saturday, October 25th, 2025, so we are not seeing live trading. But we have to talk about the seismic move that happened in yesterday's session. Advanced Micro Devices, AMD, finished the day on Friday, October 24th, closing at $252.92. That wasn't just a mild gain, the stock absolutely exploded, running up $17.93, which is a massive 7.63% surge in a single day. That is a move that demands our full attention. Now, anyone just glancing at their portfolio on the Fidelity mobile app or the Robinhood app might see that 7.63% pop and just lump it in with the general volatility of the semiconductor space, maybe thinking it's just drafting off momentum from Nvidia stock. But that is not what happened here. That 7.63% move, which, by the way, officially pushed AMD's market capitalization over the $400 billion mark for the first time in its history, was the sound of the entire market being forced to price in a new reality. This surge was a direct and violent reaction to a flurry of news that confirms AMD is no longer just competing in the artificial intelligence build-out, it is winning contracts at the absolute highest, most elite level. This was driven by the confirmation of a massive multi-billion-dollar multi-year deal with OpenAI, another major commitment from Oracle, and, as if that wasn't enough, a completely separate and fascinating validation from IBM in the quantum computing field. For the past 2 years, the common wisdom on AMD has been remarkably consistent, whether you're a self-investing enthusiast or a professional managing Fidelity wealth management accounts. The expectation was that AMD is the brilliant, scrappy underdog. We all know the story: Dr. Lisa Su's incredible turnaround, the epic server chips that stole Intel's crown in the data center, and their pretty good AI chip, the MI series. But the consensus narrative, the one that informed every investment, was that the real AI build-out, the one that truly matters, belonged exclusively to Nvidia stock and its impenetrable CUDA software moat. AMD was positioned as the value play, the alternative you bought on SoFi Invest if you felt Nvidia had simply run too far, too fast. It was a good company, but it was number 2. Yesterday, that entire expectation was rendered obsolete. The reality that hit the tape is that the hyperscalers, the handful of companies like Microsoft, Google, Amazon, Meta, Oracle, and OpenAI that are actually spending the hundreds of billions of dollars on this infrastructure, are desperately, profoundly in need of a viable, high-performance second source. They simply cannot and will not bet the entire future of their companies on a single supplier. The confirmation that OpenAI will deploy a staggering 6 gigawatts of AMD's next-generation MI450 GPUs, and that Oracle is committing to 50,000 of the same Instinct accelerators, is the validation the market was holding its breath for. This isn't about AMD being cheaper. This is about AMD's hardware and roadmap being capable of handling the most demanding AI workloads on the planet. The market is now being forced in real time to accept that this is not a winner-take-all market. It is a duopoly, and AMD just proved it is the other essential half of that equation. Let's really break down yesterday's 7.63% move, because the mechanics of it are telling. That $17.93 climb was on staggering volume, far, far above its 30-day average. This was not a slow-moving retail event with people logging into their Robinhood stock trading accounts to buy a few Robinhood fractional shares. This was a seismic institutional repricing. We are talking about massive block stock trades hitting the tape all day. This is Fidelity, this is Vanguard, this is T. Rowe Price, the giant institutions that run the Fidelity mutual funds and the broad Fidelity ETFs, being algorithmically and manually forced to buy. Why? Because every analyst model on Wall Street was, as of Thursday, fundamentally wrong. Their projections for AMD's AI revenue, which they might have cautiously pegged at a few billion for 2026, just got revised by tens of billions. When an entire sector's total addressable market, TAM, is recalculated, you get a move like 7.63% in a day. Think about the psychology of the traders. Anyone using the professional-grade Interactive Brokers platform saw the pre-market news and had a career-defining decision to make: chase the gap up or assume it was a sell-the-news event. The fact that the stock gapped up and continued to climb all day, closing near its highs, tells you the answer. They chased. Anyone who was short this stock, betting it was overextended, experienced maximum pain and was forced to cover, adding even more fuel to this rally. This is what a fundamental shift looks like. It's also a moment that highlights the difference in online investing tools. A simple intelligent portfolio or a SoFi robo-advisor might be programmed to automatically trim a position after such a violent pop to rebalance. But active managers, the ones using a full-service Fidelity brokerage or the Interactive Brokers trading terminal, recognize this as a fundamental alteration of the company's future earnings power. They weren't selling, they were trying to figure out how to buy more. The specifics of these deals are what matter most. This isn't just selling more of the current MI300 chips. The OpenAI and Oracle deals are largely for the next generation MI450. This means that the most sophisticated AI company on Earth, OpenAI, has seen the roadmap, they have tested the silicon, and they are committing billions of dollars before the chip is even in mass production. This is a level of forward-looking confidence that completely smashes the old expectation that AMD's software, ROCm, is too far behind Nvidia's CUDA to matter. The reality is that for a customer at the scale of OpenAI, they don't just use the software, they write the software. They will happily build their own software stack on top of hardware that meets their performance, power, and supply chain needs. They have effectively endorsed AMD's hardware as being on par, and that signal is what echoed across trading floors. And then, as if a $400 billion market cap and deals with two of the biggest names in tech, IBM dropped a completely separate and fascinating news on Friday. They announced they are successfully using AMD's existing FPGA chips, technology AMD acquired with Xilinx, for a critical process in quantum computing error correction. This is a completely different, highly advanced field. The market expectation was that Xilinx was a good, stable, but somewhat boring acquisition that helped with margins. The reality is that it's a hidden ace, a Trojan horse that gives AMD a foothold in next-generation computing architectures that even Nvidia stock isn't touching right now. This adds another layer of deep technological legitimacy that is simply impossible to ignore. This is the kind of detail that separates a good investment from a great one. This combination of news is what turns a stock into a market leader. So, for anyone who's new to this name, let's just quickly establish what AMD does. For decades, they were the other chip company, locked in a brutal fight with Intel for the PC market. Under Dr. Lisa Su, they executed one of the greatest turnarounds in corporate history with their Zen CPU architecture, and then they did it again, capturing massive high-margin market share in the data center with their EPYC server processors. They also make the semi-custom chips chips that power the Sony PlayStation and the Microsoft Xbox. They acquired ATI for graphics, putting them in the GPU market against Nvidia, and they acquired Xilinx for those FPGAs. The Instinct line is their data center GPU, the chip aimed squarely at Nvidia's H100. The expectation was that this was a show-me story. The reality, as of Friday's $252.92's close, is that they have shown everyone. Looking ahead, the entire landscape has been reset. The stock closed at an all-time high. Analyst price targets are now in a frantic race to catch up. We're already seeing upgrades from major firms, with targets being moved to $300 and even $310. The immediate expectation might be that the stock is technically overbought and needs to pull back. But the reality is that analysts are now throwing out their old 2027 and 2028 earnings models and pulling that revenue forward into 2026. The entire forward-looking earnings timeline has been compressed. The next major catalyst will be the upcoming earnings call, and even more so, the 2026 Analyst Day. You can be sure that management will be pressed for the exact dollar figures and, critically, the gross margin profile of these new AI deals. Now we have to talk about the risks. This is not a set-it-and-forget-it investment. Execution is now everything. AMD must deliver these next-generation MI450 chips at scale, on time,